Morning, everyone, and welcome to your Daily 5. I'm Leslie Jouflas. Trading Live Online is my website. And here's the URL. You can come visit, or if you have any questions or comments, feel free to email me. My email address is right here. Here's a couple of books that I have out and published. Trade What You See is on the pattern recognition that I use. It starts you from beginning to end, and it's now available in 6 languages. Well, today we're going to take a look at a particular pattern, and this is one of the patterns that's covered in this book that's forming on the S&P 500. That's where we're going to focus today. But we're also going to update the Dow Jones Industrial and the NASDAQ, and we want to take a look at some levels that the NASDAQ is at right now, and it's sort of a do or die level. So we want to be taking a look at that, and we'll also look at where the Dow Jones Industrial is. So let's get right to the charts. So let's start with this chart. This is a weekly chart of the SPX. So if you monitor the SPY or the S&P 500 futures, which we'll probably look at a chart or two of that today as well, you can follow along and you can find, the trend lines that I have drawn in on those charts as well. So the trend lines here, we're going back to late December, early January. And I've got two different trend lines drawn on this. One is coming down from where the open and closes are, and it's coming through. You can see the open of this candle and extended down. And the other one is using the absolute high of the index and coming across the second point and then extending that across. Now, these trend lines have been on my chart since this area. So once these rallies formed, that's where I drew the trend lines and extended them down, and I just keep extending them as needed. So the S&P, the SPX, has traded to the 0.50 using the March 2020 lows. Now we've had a big rally off of those lows, and the midterm elections generally tend to have an upward bias, and we've seen that bias playing out. So now what next? Well, you can see on the chart that the price is getting very close to testing this trend line. There's also another trend line coming down on this dashed line that's been very helpful on the decline this year, and that's using these lows over here, touching this low point and extending across. And notice as it extends how it's getting right on to the opens and closes of these bars. And the trend line was retested here. It was broken through, found resistance at this upper trend line. When it uh, uh, declined from there, came back, it retested it again. So we want to watch that trend line as well. So we have kind of a clustering of trend lines. So if the market's able to get above about this 4,020-ish area, then the next level up is going to be close to the 4,100 level, maybe just a bit above it as well. And so those are the numbers I want to keep in mind. But right now, looking at the weekly, now we're only on Monday for this week. So this bar is not telling us anything yet. We have to wait for the end of the week. This is how last week's trading with the midterms went and where it closed. So we want to check back on this late in the week. So just sort of ignore that bar for now. So now let's scale down and take a look at a couple of other things. Before we do that, I want to note the RSI on here. The RSI, you can use support resistance levels with the RSI. And so this upper dash line here is going kind of way back and extended forward. And you can see that it's hitting some of these points where it broke the support, came back up, tested it, back up to that area, and it's been back up to it a couple times, and the market is back right around that area as well. So now that we have this information, let's now scale down to a daily chart of the S&P. Okay, so now we're looking at the S&P 500. Now we're looking at the futures chart on this. And here is sort of an ongoing work on the different patterns and levels that have been forming using the March 2020 lows, the retracements up to the highs. And here's where that 50% retracement was here. Back here, I just keep notes on the chart. Some of you that followed have seen this before, but there was a big butterfly cell pattern that completed late December, early January, prior to the sell-off. And then I've just marked in some of the other patterns that have formed. This is a butterfly buy. Here's a Gartley sell pattern. Here's a big ABCD buy pattern. Recently, we had a buy pattern right at that 50% low. And so now this is the pattern that I'm monitoring. So let me give you a little bit of a close-up here. So now I'm monitoring this potential ABCD Gartley sell pattern. And so what that is when you get one leg up, you get a retracement that does not exceed where the start of that pattern is, which would be down here at this low, and then you get a second leg that is equal to or extends, usually by a Fibonacci ratio of 127, 1618, and that forms this cell pattern. Now, what's interesting with this cell pattern, if we look at the retracements, so from this high to low, I've put on these Fibonacci retracements. Here's a couple things to note about the retracements. First, the retracements off of that low, because we know there was a strong push to the upside. Notice how it kind of sliced right through the 382. Didn't really find much resistance there. The 0.50 found some resistance, and that formed the retracement that formed the B to C leg. So we have A, B, B, C, and now we have the potential C, D leg forming. So these types of patterns allow you to see in advance exactly where the price levels are that the pattern may be completing, and then you can monitor as price gets closer. But what I've noticed with this portion of the leg is that when the price started to come back up again, we've got a very long bar here. We're getting some stalling action right at the 618 retracement. However, if this does just stalls right here and then continues up, then this did not really act much as resistance, and we want to monitor price when it gets up around that 786, just above the 4100 level. So we just looked at the longer term retracements on the weekly chart. Now we're combining this pattern with those levels that we looked at with the trend lines. So that's just above the 4100 level, and that's where I'm going to be really monitoring. So for a pattern like this, since you've got the price moving in the upward direction, you want to be watching for some type of confirmation of return to the downside before just jumping right in there with a short sell. It's really best to come to my website, get the introduction course of this pattern so you really understand them. But we have a confluence of the CD leg completing right at the 786 retracement. And if we also, just using my cursor, the horizontal cursor, it's getting back into resistance here. There was previous resistance here, previous resistance in these areas. So just above that 4100 level is definitely an area we want to be monitoring. So let's take a quick look now at the Dow Jones Industrial and the NASDAQ. And here's the NASDAQ. This is, if we just looked at the S&P, which is sort of way up here, here's the NASDAQ that's just now breaking out of this range. It has the look of an inverted head and shoulder. There was a big spike move down here. Um, I've put this on as a kind of a measured target. So that's, that's a strong move up on the NASDAQ. However, we want to be watching this and where this breakout level was to monitor it to see if price is able to hold above this. If the price fails and turns back down, then we have to look for a different pattern. However, if it continues to the upside and can gain some strength to this move, then we can be looking for potentially the upside target here. But keep in mind the retracement that we just looked at on the S&P. This is the same retracement where the S&P is up here at the 618. The NASDAQ's not even to the 0.50. So it's lagging way behind the NASDAQ. So let's take a look now at the Dow Jones Industrial. Okay, if for those of you that watched my last Daily 5, and you can just look on the feed there for it, where I covered the Dow Jones on that as well, because there was a lot of strength, and I covered some of the stocks within the Dow. Well, the Dow is still stronger. So comparing, where we saw the trend lines on the S&P, now this is a daily, but we see we had a false breakout to the upside here back in August of that trend line, and then down to new lows. But here you can see from the March 2020 lows to the late December, early January 2022 highs, you can see that the Dow Jones Industrial had enough strength that it didn't even make it to the 0.50 retracement. So the NASDAQ had gone down to a deeper retracement to the 618. The S&P hit just on target the 0.50, and the Dow Jones is the strongest without retracing all the way to that and then rallying very strongly off of that level. So the Dow has broken this trend line now to the upside. So let's take a look at one other thing. We looked at two retracements on the S&P and the NASDAQ. So we saw that the NASDAQ was lagging way behind. The S&P is here at the 618, and the NASDAQ is not even to the 50 yet. And the Dow Jones Industrial is above this 886 retracement. Now, here's a little tip with this 886 retracement. Generally, when the market starts getting closes above that 886 retracement, the market will generally trade to that 1.0, and oftentimes it's likely to exceed the 1.0. So let's watch the Dow Jones Industrial around this retracement. It's had strength to it. And so any pullbacks here, we want to see if it can continue up to that 1.0, exceed it. If so, the next levels to be watching are probably going to be right up here. You can see I've got a horizontal trend line drawn on this area, and above that, the 127. So some of the Dow stocks seem like they might be getting a bit overextended right now. So we might see a bit of a pullback in that, but I believe that's going to be offering buying opportunities in the strongest Dow stocks. Well, that's it for me today on your Daily 5. I'd like to thank you for joining me today. I do have a presentation coming up this Thursday, and I'm going to be covering ranges versus trends. And I think this is one of the most important aspects for traders to learn of technical analysis so they can identify the market environment they're in. If you come over to my website, Trading Live Online, and just scroll down and find the subscribe to the email list, that'll get you on the email list, and you'll receive the link to register for that presentation this Thursday. Thanks again for joining me, and have a great week, everybody, and happy Thanksgiving.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.